Welcome back. Indian markets are not having a great day, though they're off the early morning lows. But crude prices had their worst session of the year yesterday after Trump called the crude prices too high. So, Manisha, we saw a fall of 3%. What's happening today?
Oh, well, yes. The U.S. president also said that the OPEC should take it easy and relax on the crude oil prices, and we actually did see a reaction of that. But apart from that, if you also look at the U.S. output, that's at record highs of 12 million barrels per day. The U.S. exports are at a record of around 3.8 million barrels per day as well. So we are looking at stronger numbers from there. And with the U.S. president actually pushing it, we have seen that perhaps much needed profit taking come in for the crude oil prices. But even with yesterday's decline and from what we've seen as a decline in Asian markets right now, the crude prices still are up 20% for 2019. Jonathan Bharat now joins us with his sense on the space. Jonathan, hi. Quite a bit of a decline yesterday. Would you say it wasn't coming and the US president's tweets were just perhaps a reason to do that?
Manish, good morning. Always interesting to see Donald Trump. You have to wonder whether or not he's got a position on the market before he actually tweets. To see markets move that fast after he's tweeted is quite interesting. But all jokes aside with it, yes, we've seen the market under pressure. Yes, we've seen increased production out of the States. And yes, I think we've seen a top for the short term.
I think Jonathan is just jealous.
Are you, Jonathan? Did you wish you knew what the president was going to tweet, really?
I mean, move over Goldman and UBS and...
It's the US president driving the markets.
Who moves the price?
Absolutely. It's crazy as it seems, but you've got to wonder, don't you?
All right. So, Jonathan, what is your sense on where is the crude prices heading now? I mean, we still do have stronger fundamentals if you look at the US and China trade talks. But that, I assume, you would also say is much in the hands of the US president himself now. But with the kind of OPEC cuts and not so voluntary cuts and the demand slightly getting better, how are you looking across all fundamentals?
Look, I think at the moment when I still see tightness in the market, but I don't see tightness extending to new highs. I think we have cemented a top in the moment. I think the market will focus on US production, Baker Hughes rig counts. They'll see whether or not they will continue to produce. Let's see what GDP data coming out this week says. But at the end of the day, I think the market will focus on supply on the US. And obviously that supply tightness that we have are lower in the market. Supply tightness from OPEC, supply tightness in America. Read the pipeline situation. But at the moment, I think we've got a top in place for a short term.
So what is the range that you're looking at right now? Because we've done 67 plus kind of levels. Yesterday's correction has been quite sharp and deep. I mean, we've been talking on how the support or bottom perhaps for the crude has been done for the near term. Would you say the same about tops now?
Yes, I think so. I think we've now sort of found ourselves into a range, and I think that's important for the crude market, also important for general economics. We're now not factoring, there'd have to be a very large move to push it right to the top side. On the downside, we know that we've got OPEC plus and also that supply tightness. So I think we're now going to develop into a trading range for crude oil, and I think that might be extended. We'll have to really wait and see trade talks. When we see the trade talks and what's happening, I'm not that positive that we will have an outcome yet. And as a result of that, that might also see more of a hiccup for oil and probably see trade a little bit lower from these areas.
Jonathan, one final word. And of course, markets would continue to watch out for the US and China trade conversation. There's a talk that the March 1st deadline could be extended. And that clearly has been supportive for many industrial commodities in the last few days. How are you looking at the price movement there?
Look, I think, at the beginning of the week, I was sort of saying that the trade talks will be steps in the right direction, but I don't think they'll come to a conclusion that quickly. So I think like a lot of these discussions which we find with Trump's administration is that they tend to be hard hit, but then they seem to drag the train in terms of actual results. So I think this will be echoed again within the trade talks. Wouldn't be surprised to see an extension. The market, who was long, I think leading into this, expecting an increase in economic activity, hence demand, will be disappointed. As a result of those, I think those longs will exit the market looking for other opportunities.
Okay, Jonathan, thank you very much. Manisha, thanks very much for taking us through that conversation. We slip into another quick break here. The markets continues to recover. We are down 70 points now. So, the direction is clear. It's upwards and it's pushing up. Let's see how far. We take a very quick break. We come back. Ashwini Gujral with a quick chart check, some trades on the other side.